The only thing that has really changed is on the political front. We're now a coalition government. So you have some pressures from the coalition side.
I think the long-term priorities needs to be given focus. Budget should not slip away from those long-term priorities of making India a manufacturing center, keeping inflation down, and attracting private capex money is very important. That will happen only when the interest rates in the country will come down. Market wants some real new narrative. In that way, even the negative points in budgets sometimes gets missed out. The positive points keeps getting highlighted more often. In a bear market, the opposite happens. However good the budget is, the market wants to rate it negative. That's my long-term experience of tracking budget versus market sort of a thing. If you look at the current government, they prioritized on manufacturing, and I think manufacturing is a must for India to have a long-term job creation, and then also keep the growth intact, which has been going very volatile in the last 10 years.
Now, can you take us through what is happening in the power sector? And more importantly, are you in the camp that expects large structural investments in this sector going forward? It would be really great hearing your view on that.
The power demand in India will sustainably be at around 7% sort of a range in India. If that is the case, not being focused on creating enough capacity suddenly has got our policymakers on the back foot. I think you are from Tamil Nadu, you would have got your electricity bill recently. What a shocker.
I think a weaker dollar and higher yield expectation, I think, are two very strong narratives that you get to hear from a market's point of view.
Market Thalaivas brought to you by Sundaram Alternates.
Welcome back to Market Thalaivas. Stay tuned for an in-depth discussion packed with valuable insights to help you navigate the ever-evolving market terrain. Remember me from the last time? I am your host, Arjun Nagarajan. This is episode 4, and in today's session, we are joined by Mr. Madana Gopal Ramu, Head Equity and Fund Manager at Sundaram Alternates. There's a lot that has happened in the last few weeks. General elections, a coalition government, an upcoming final budget, and a lot of global uncertainty around upcoming US elections. Let's jump right in and explore these topics in detail. Welcome back, Madan, to Market Thalaivas. Pleasure to have you here. So I think we'll just jump in straight away into the questions. The current political dispensation is truly a coalition government of sorts, and this has raised a lot of questions in the minds of market participants on its implications on the union budget. Now, there appears to be a strong narrative that expects a shift towards social spending. Now, this comes at a point in time when India badly needs to continue and keep its investment cycle alive and kicking. Now, given this backdrop, how do you see the budget playing out? And more importantly, do you think the finance minister can keep everyone happy?
Yeah, hi Arjun. I think this is an interesting phase from a policy framework point of view, given that the current government has got a mandate to continue. And what they set the tone for the next 5 years, more or less, the current budget, what they say will probably set the tone in our opinion. We feel that the kind of surplus that the government got through the RBI dividend and the tax surplus, there is sufficient amount of money left for the government to have a very balanced budget. But there are certain priorities I think the government needs to keep in mind from a long-term focus and keeping in mind the long-term growth trajectory for India. I think there should not be any slippage on the fiscal consolidation phase, which is very important in our opinion. Second, I think as much as investment was prioritized in the last 3 years to get the job back, to get the growth back post-COVID, bit of a balance and little bit of a focus towards consumption should also be expected in our opinion, and that can help private capex to come back. A lot of the capex today is still being supported by the government. Private capex is only showing initial signs of coming back. To really get the private capex back, I think a bit of a support to the consumption, because we are seeing a situation where the consumption is lagging behind despite India growth story of around 8%. A lot of consumption companies are not reporting double-digit growth. Volume growths are still in mid-teens or even not even mid-teens, sorry. It is in single-digit or even low single-digit sort of number. So we feel that some bit of a support to the consumption can help the growth to come back. So, in our opinion, budget should give priorities to these three major points. In our opinion, investment should not be lost focus. So, you should not do a U-turn and then start focusing on social themes. Uh, in the investment side, government had prioritized PLI, focus on electronics, semiconductors, electric vehicles, all these areas where India can create a meaningful scale to compete really with China globally. These areas cannot lose focus also. So, in a nutshell, what we feel is the government should, in our opinion, have a very balanced approach both towards investment as well as consumption, and also not slip away from the fiscal consolidation. And all this put together can help us bring back the private capex. Is what the view that we have. And uh, Arjun, you having spent a lot of time debating and discussing on these issues, what do you think and how government can allocate the surplus as well as address the demands from various sectors? What is, in your opinion, government can do? If you can elaborate, that will also be.
I completely thanks a lot, Madan. I completely agree with your point of view. So from a final budget standpoint, I think February we saw the interim budget. Now we'll be seeing the final budget. What has really changed from then to now? The only thing that has really changed, one, is on the political front. We're now a coalition government. So you have some pressures from the coalition side. The other bit, more importantly, is the fact that incrementally there's been a bumper RBI dividend, just like you mentioned. So, which incrementally is roughly around 1.25 lakh crore is what additionally you seem to have from a budget point of view that the final budget has extra to spend. Three segments seem to be key focus areas, given that the government might want to pick up on the revenue expenditure bit and might at least appear a bit populist, though it might not really be populist in a true sense. So, one is PM Kisan allocation towards supporting farm incomes. Second, PMAY Awas Yojana, rural and urban housing. And thirdly, employment guarantee, MGNREGA. I think these three schemes, I think, can see a fair bit of focus in the budget. On the fiscal and the capex side, like you rightly said, on the fiscal and the capex side, there might not really be any change in direction. You will continue to see fiscal consolidation. You will continue to see a capex focus. But maybe if they want to sort of just add a small positive layer to the market narrative, they can just give a token drop in the fiscal deficit slightly lower than what they had initially penciled in at around 5.1. They might bring it down by 10 basis points. And on the capex front, we're already at 11 lakh crores. They might just bump it up just a bit, just so that the narrative doesn't really slip. I think this is broadly what the government can sort of see from a budget point of view.
Thanks.
So
Thanks.
broadly, I think in agreement with what you're saying.
Yeah, I think the long-term priorities needs to be given focus. Budget should not slip away from those long-term priorities of making India a manufacturing center, keeping inflation down, and attracting private capex money is very important. That will happen only when the interest rates in the country will come down. For that, keeping the fiscal down as well as keeping your currency in check, all this will kind of provide a long-term stability. Inflation also needs to be controlled. So I think what you're saying, if the budget comes out in that way, I think that will be more welcome by the market, in our opinion.
Now, Madan, let me come into the next logical question and the most important question for our viewers. Now, how would this view of yours translate into sectoral calls, and what would your sectoral allocations be like? Or rather, would it be fair to say that there would not be any major structural changes to your thought process given how you see policy continuity in the years ahead? Would that be a fair statement to make?
That's a fair question as a logical extension to what we discussed. First thing is, I think market has reacted too much and too fast towards the budget, in our opinion. And we are also of the opinion that in a bull market, the market tries to read budget always positive, irrespective of what it is. So we are in a bull market where flows are continuously coming through. When flows are coming through, market wants some real new narrative. So the budget always in that way even the negative points in budgets sometimes gets missed out. The positive points keeps getting highlighted more often. In a bear market, the opposite happens. However good the budget is, the market wants to rate it negative. That's my long-term experience of tracking budget versus market sort of a thing. Given that we are in a bull market where flows are continuing to come, I think whatever the government wants to say, the market will try to read positive, except in a case if they take a U-turn. The two U-turns are either go too much into socialistic schemes, allocation more towards it, or you go against and then say fiscally we will deficit might increase. I think the chances of the second one happening is much lower. I think even if there is a bit of an increase in the socialist scheme, market won't mind it too much. That's on the market. Sectorally, we are well positioned to play on the long term goals of the current government. If you look at the current government, they prioritized on manufacturing, and I think manufacturing is a must for India to have a long term job creation, and then also keep the growth intact, which has been going very volatile in the last 10 years. So post-COVID, very clear agenda to get the manufacturing back and supporting it through PLI and supporting it through various mechanisms. Reduction in interest rate will be very important to get it kickstarted to the next level. Therefore, if you look at our manufacturing exposure, we have a lot of companies in the manufacturing space where we feel that the government priority will play out. We have an interesting scenario globally. If you look at China is sort of coming back on manufacturing by focusing on certain sectors. And India also will need these sectors and create a meaningful scale. PLI schemes support these sectors. So I think continuity in that is expected. And we are also positively positioned on some of these sectors where government from a policy continuity point of view will help growth in those sectors. So manufacturing is an area where we have allocated. Also, if you look at, we feel the budget can provide some incentive to get the consumption back. In our portfolio, we always had a very balanced approach towards all the three pillars of the economy: investment, consumption, financials. So in that way, the portfolio is much more balanced. It's not skewed only towards infrastructure and investment, which has been the theme which has run heavily in the last 2-3 years, right? And also budget also feeded into it in a lot of way. But we have a much more balanced sort of an approach. Manufacturing is one portion, and consumption is another portion where we have a good allocation. Consumption has suffered in the last 2 years, if you see. But it is very ironic to see that we have a 8% GDP growth rate and consumption is taking a backseat. Not many companies in the consumption space are having a good growth reported at this point of time. Both urban consumption and rural consumption is struggling. Rural has seen some bit of improvement in the last two quarters or so, but urban consumption has taken a backseat. It is not something you expect when the country is growing at 8%, right? The discretionary spending should be at a very high level of growth, which is not happening. So that's why I said in the initial part of the query that government should do well to address this part of consumption. That will help the capacity utilization levels to improve and also set in a long-term growth trajectory. So therefore, we also have exposure towards consumption and we are looking forward for some stimulus there. And the third area, financials. I think financial is an area which is growth cyclical, we call it as. If India, we have to grow at, say, 7% or so, roughly, we look at 11% sort of a nominal GDP growth rate. Retail credit is expected to grow somewhere closer to 1.5 times of nominal GDP minimum. So you can expect 18-20% sort of a growth in the retail financial space. We are heavily positioned towards NBFC to benefit from this. And we have seen last decade also NBFCs have outgrown the banks in a meaningful way. And we feel that the coming decade will be a very good decade for NBFCs to grow, keeping in mind the growth trajectory. So if budget is sort of more balanced and it is pro-growth, we feel that the portfolio is well positioned to benefit out of it. We don't think the portfolio, given the current valuations at which there's an interesting aspect that I keep discussing in my other interviews. If you look at what are people expecting from the infrastructure and investment, and you aggregate the expectations of all companies in this space, then I think given the fiscal constraint that the country has, the expectation is not matching with that fiscal constraint. So I'm not saying government will not spend more, but the expectation, if you aggregate all the companies, like for example, if you aggregate the analyst expectation of all the defense companies' earnings, and then look at what government can do, you will feel there is a big amount of gap between what government can do and what is the expectation. Markets tend to overestimate in the short period in sectors like this. So to that extent, an investor has to be careful not being too much skewed towards some of these sectors where the expectations are very high. We expect the government spending to improve, but it is not going to be probably in line with what market is expecting in some of these sectors. So we are not touching those sectors, but otherwise, I think we have a very balanced approach towards in our portfolio to play the India growth story, which I think the government would prioritize in the current budget as well.
Sure. That really was helpful, Madan. And I really like that part where you said that all the negatives, if in any budget during good times, will generally be overlooked. That is very, very realistic a statement as well. Now, let me come to a hot topic that has really picked up a lot of momentum in the market narrative recently: the power sector. Now, can you take us through what is happening in the power sector, and more importantly, are you in the camp that expects large structural investments in this sector going forward? Would be really great hearing your view on that.
I think you are from Tamil Nadu. You would have got your electricity bill recently. What a shocker! There is a relation to all this, right? So government, I think I'll just step back and go, and then I link it to this point that I mentioned. I have tracked power sector for almost now 15 years. I think power sector went through a long period of consolidation. And if you look at last 2 years, the kind of demand growth that we are seeing, given that post-COVID, the demand has come back in a very sharp manner, it has surprised everyone completely. Not just in India, even globally. If you look at globally, data centers can consume so much of power. There is an interesting data that has been put by Morgan Stanley, which says that every data center has potential to consume something like 15 million cars or something. That kind of a power they consume. So electric vehicles. So data centers consume a lot of. I might be a little wrong here and there on the numbers that I mentioned, but that is the kind of power that data centers consume. So globally, there is a demand for power coming after so many years. It is putting extraordinary pressure on the grid. And in India, where we are seeing a growth of around 6-7% of GDP growth rate, your power consumption also will grow minimum 7%. It can actually grow higher in case if the growth is more dependent on manufacturing. So that's what we expect. The power demand in India will sustainably be at around 7% sort of a range in India. If that is the case, not being focused on creating enough capacity suddenly has got our policymakers on the back foot. Therefore, you will see a sense of urgency to add new capacity. New orders will come. There is no other way. Otherwise, all of us have to be prepared for power cut in 2 years time period, and it can be very severe. This is almost happening after a decade, in our opinion. And if you add new capacities, it will take its own time. Good thing that we have right now is renewable energy, particularly solar power. It is more affordable right now. You can actually get solar power at 2.5 rupees per unit, and it can be a very scalable. It can be scaled up also very quickly because China has plenty of capacity for solar power, and in manufacturing also. So we can make use of it to add capacity. Also, Government of India is prioritizing manufacturing of solar cells and solar modules in India, and quite a few of companies are focused on creating capacity as well. So, but the bad news is solar can only feed you in the daytime. Your peak consumption comes in the evening, 7 to 11. That has to be fed only through thermal power. Otherwise, you can't depend on wind. Wind is very erratic. Therefore, you have to depend on thermal power. So, as a country, we did not prioritize on thermal power for the last 3-4 years. Now we have woken up and we are addressing that gap, and a lot of orders will come. This, in addition to not being seen as a polluting country, will put the investment 2 times what it was in the last cycle. Therefore, power sector will see an capital investment, unprecedented sort of a capital investment in the next decade. And a country like India will see a much more investment. Globally, also, we are seeing this happening. So, the twin priority of both meeting the climate targets as well as also meeting the energy demand will lead to a substantial increase in power sector investment in the next decade. If you look at either it is a state government or a central government, in this particular sector, both will be talking the same tone, primarily because if you don't meet the demand, then you are bound to lose the next election. It has happened in the past, I think, quite a few times. Power is a very sensitive sector. That is why I think many of the state governments understanding that investment needs to happen, and they are already running at a loss. I think they will resort to tariff increase. And what happened in Tamil Nadu is just the beginning. I think many other states will do tariff increase because a lot of investment has to happen. Otherwise, we are bound to see uh, in, uh, we are bound to see power cuts happening in India. So, power sector, irrespective of what government wants to do, it's an area where government has to focus. I don't think power sector takes too much out of the budgets. It is mostly dependent upon the banking sector in terms of financing, and we have a very good set of PSUs and the private sector which are well funded, which can take care of the funding. And we also get good support from international investors also, if it is more to do with climate change sort of investment or not. So power sector is an area where I think structurally you have a large opportunity to invest into, globally as well as in India, and more so in India, in our opinion.
One last question for you, Madan, before I let you go. The last week has been buzzing with a lot of market narratives around a Trump presidency. What is your worldview like here? And can you take us through how you visualize the quarters ahead?
See what happens in what happens in US and the uh, change in government there impacts one of the key sectors in India, which is IT sector in India. From an immigration policy point of view, in the past, Trump has been quite vociferous on what he wants to do on the immigration side. Last time also, when he was in power, there are some changes that has been made, but nothing was material enough for you to worry. But there will be noise around immigration policies and all, which you need to be careful about. Also, Trump has never been seen as a pro climate change sort of a president. So the point that I made, that globally we are in a situation that we have to meet the energy demand as well as meet the climate change. You might see some bit of a change in those narratives. Uh, Probably some of the companies which are trading at a very high valuation today, because globally everybody is talking about climate change, some bit of a reset can happen in those valuations, in our opinion. But I don't think in India we have many of those names. We are just in the process of creating a purely climate sort of climate technology related sort of stocks, which is yet to be meaningfully forming part of the Nifty. So we feel that there's this narratives can impact. What I'm more worried about is if China slows down in a Trump era due to tariff barriers and all, we probably might see global growth again getting knocked down, which can be negative for commodities and the energy sector and all those areas. We are not heavily positioned on those sectors, but I think global growth coming down may not be read very positive by any country, including India, in our opinion. But beyond that, I think a lot of it, what government of India is trying to do on import substitution, on consumption, on financial inclusiveness, these areas, I don't think it matters really who is ruling US, right? So we feel that most of it will continue, but there are certain pockets like IT sector, commodities, all this you probably have to have a relook at if in case if change happens. But I think you have to wait and watch. What is when Trump takes over? What is a policy priority he puts in? But broadly, from based on what he has been talking and what he has done in the past, we feel that that's something you need to keep a watch on. But one important thing that he can do to the global risk on trade is he always pro interest rate cut. So market will start discounting an interest rate cut now. Probably if Trump is coming back. If that is the case, then risk on is again back, and again India will be seen as an interesting area. Your downside risk is fairly protected in India if that were to happen, and you can expect an upside from here as well, having market has gone up also. So Trump coming back can be seen as a pro-market sort of news flow, if you ask me. But from a growth perspective, after we will have to wait and see what implication it has on the global growth and China's growth, and what he takes view on climate change this time. These are areas. What is, in your opinion, Arjun? How do you see Trump? You have been reading and discussing with us a lot on what happens in US. You also have a view that India's markets in the long term reflects what happens in US, right? So from that perspective, what do you think a change in government there can impact Indian markets?
Sure, Madan. I think you covered a lot of it, but I would want to reiterate that point that you made. That one thing that we constantly feel is that it is a globalized world after all, and that saying that they always talk about, where if US catches the cold, or rather, if the US sneezes, the world catches the cold. I think that is relevant even today. On the Trump question, I think the negative view on alternative energy, I think that is something that I completely agree on. From a macro point of view, like you also said, that push to lower rates is very likely, at least given what Trump has been saying recently, and what he's actually said in his previous presidency. The move towards having more tariff barriers. One narrative that we also hear is maybe he will try to push for more crude supply. So cheaper oil is a narrative that one hears. A push towards U.S. manufacturing as a result. A push to extend tax cuts, more likely spending, higher budget deficits. All this sort of boils down to two things. One is a weaker dollar and higher yields. So, in general, if you're looking at Trump trades in the markets, I think a weaker dollar and higher yield expectation, I think, are two very strong narratives that you get to hear from a market's point of view. But yeah, broadly agree with you on all your points and on Trump as well. The alternative energy view, I think that was very interesting. And that's something that we'll have to actually wait and watch how that plays out.
If you look at, does he have any other option? Because even if he wants to go towards fossil fuel at this point of time, natural gas is the only option that he has. And being a president, he needs to be diversified. Therefore, I feel there will be a change in his tone, not probably due to climate change, but today solar power is much more affordable, and it's not the same than it was the previous Trump era. So I think, and solar can be scaled up very quickly. Also, there are certain fuel cell related technology which is now becoming much more viable. So I don't think he needs to look at it purely from the prism of high cost climate change related electricity. He can actually see the reality and take a appropriate call, in our opinion. So yes, those which are costly and are seen as climate change related need that are being brought from a climate change perspective, those areas probably we need to wait and watch what he does. But otherwise, I think today you can get a green energy, at particularly the solar green energy, with the backup battery, at most at the same price as fossil fuel. So that needs to be kept in mind. I think from that perspective, there will be a change, is what I feel in the narrative from alternative energy. But costlier alternative energies will get a pushback. Probably a green hydrogen might get a pushback because it's very costly and it's still not closer to any of the other source of power in terms of cost. So we will see some differentiated view, but not a complete push off of the alternate energy, in our opinion.
Fair enough. Lovely, Madan, having you on the show, and always looking forward to more conversations ahead. Pleasure
Thank you,
having
Arjun.
you.
Really enjoy discussing with you. Looking forward to next session. Thank you so much.
Thank you so much.
Market Thalaivas brought to you by Sundaram Alternates.